So today, for the Nasdaq 100 p.m. session, I will review that. We had the 30-year bond, the orange news. Today was a day where I didn't engage much in the market, and the reason for that is that yesterday it was a good trading day where I have seen my analysis for the week with the relative equal highs being delivered to. And even if I didn't take part in that specific trade, it still felt good to see the analysis panning out. But I was able to take some other trade using the 22 model, uh, the short there that I explained yesterday. And it was also nice to see the 22 bullish model afterwards delivering. So one lesson that I have learned in the past few months as I started trading and my study from ICT, especially his psychology videos, was that if you make money early in the week, the best thing is to stop and to enjoy the rest of the week. Looking at my journal, I realized that one of the biggest mistakes that I have done that made me lose money in the past is to work too hard. So in other professions, if you work harder, you get more reward. But in trading, it's better to take it slow. So it's better not to work hard because the more hard you work, the more you increase your probability of losing as well. So you want to keep like a sharp edge. And if you overtrade or if you like overdo things, your sharp edge becomes too much used, so it's not going to be sharp anymore. So it's better to trade more like a sniper than a machine gun, to really observe and wait for those good setups and only engage those. So for that, like I decided that the rest of the week, since I'm already closing in profit, it would be best to keep my profit and to work on my psychology by being patient and just observing. Especially in this market environment where with the tariffs and the whole tariff war going on, the risk is very, very high. So I've already seen like the brokers are increasing their margin quite a lot. And that makes it an environment that it like anything can happen. There can be like a fluctuation in price that simply wipes us out. So I prefer to be a bit more cautious and to close the week early. But if we look at today's price action, so I've annotated here, like this is today, so we see that we came back to the week consequent encroachment, the daily consequent encroachment. We see the 50% level, 1811. And we see that today we came and we found some support for that. Also quite close to this one as well. And if we look when that happened, so here I'm transposing the levels on a 4-hour and on a 1-hour chart. And we can see how price came here at lunch and then it went higher. And if we look on the 15 minutes, see how perfectly the 15 minutes are respecting that daily wick CA. And then here we have like a fair value gap BC. So there is more confluence about that. If we look at the other templates, let's see, going back to price action. If we look at the new day's opening gap and new week opening gaps, we see yesterday we made a high at the close of the PM session on Wednesday. And then notice how we respect the new day opening gap. We touch the low of it and then come lower. And then this is the new day opening gap of previous Thursday. See how it respects it here. And then again, it comes down all the way here and see the perfect respect at 2:30 today. The PM session was quite of a consolidation type of session. It was not very clean. If we look at the opening range, we see that today we didn't reach the 50%, so it would be interesting to see if it comes here again tomorrow. There's a chance for that, like especially if it comes above this Friday opening range, comes down, touches it, finds supports here, and then goes up. We have this bearish breaker though that is protecting. I'm not sure, but I would like to see if it comes up here, touches it. I would like to see it come back to the 25% of this fair value gap, opening range gap, and then see if it can reach the midpoint. Adding the quadrants. So here I've added the quadrants of previous day, of Wednesday, and then the previous 3 days. So starting from Monday, Tuesday, Wednesday. And here we have the levels. So, and it's very interesting to see how the low of the day, which had the daily CA, if you remember from here, this one, week CA, sorry, this was 18:11:25, and here we can see 18:11. So see how the bodies is respecting that, and notice how this is the, if we go back here, this is the midpoint of yesterday's price range. See how price respects it here, and see of the last 3 days as well. If we look, 17,923, and the low is 17,919 if you look here. So see how price went to this discount at lunchtime, and then it went higher. And here we can see the trade that I liked for today. I didn't engage in this, but I really like this trade. So we had a low, high, lower low, so turtle soup here. Then shift in market structure over here. Take over this swing high. And there is no fair value gap here, but we have this order block. And this also is like an optimal trade entry. I will show it in a minute. But here we had the news. So the news for the PM session that was interesting was this orange news, 30-year bond. So notice how price had the market structure shift, and then so this could be also like a bullish breaker over here. Like we didn't get the fair value gap, but if we go on a 30 seconds, I have to go back here. So notice I am looking at the last up close candle in this sequence. A low, high, lower, low. This is the bullish breaker. So if I see on 30 seconds, here it's acting like almost like an immediate rebalance. So it's coming up, and then here it's reaching it. So it's on 15 seconds. So this is the bearish break, the bullish breaker. And then here we can actually, yeah, we can see a fair value gap here. It could be, this would be the swing high, and then coming down, taking this liquidity, reaching the equilibrium of the last 3-day range and having this fair value gap over here. And notice how it stays like only the wicks tap on the upper quadrant while the bodies are above. And this could be on a 15-second one entry. And then it goes higher. I will switch back to the 1 minute. So here, and then we go higher and see how we find respect of Tuesday first fair value gap AM. So this is the first fair value gap happening after 9:30. And see here again, respecting Friday first fair value gap. So previous Friday first fair value gap, coming down here, rejection block, and then going higher. And here we had some liquidity. And then here we have the Tuesday first fair value gap PM. And notice how when the news hit the market, it reaches there, the body staying below, which gives us an indication that it wants to go lower. It already took this liquidity on this side. And now it's showing sign that it goes lower. Here we have the 22 model short, market structure shift. Here we have the fair value gap. And notice this institutional order flow entry drill. This is a really nice entry here. So we could frame it like this. Here would be our entry. Good for protection would be like one tick below this fair value gap. This would be sort of like more risky stop loss. Or for more protection, we can put it above the mean threshold of this order block body. So if we look here, we would put it above this level somewhere here. And then we could take this trade, and then we could target the liquidity here or the liquidity here. Yeah, these would be good points. And notice how price comes down again into equilibrium. So the previous day 0.5 range hits the order block. And this is also an optimal trade entry. Trying to show that before. So if you look ICT videos for optimal trade entry, you will see how that is happening between the 75 and 79% retracement level, which is over here. So it's like a triple confluence. Order block, optimal trade entry, and equilibrium of previous day. So this is a great long entry. And then from here, price is going higher, attacking this relative equal highs that we have in place. And that's happening at 150. And then price, price is like rejecting here. We have immediate rebalance with this long week. Here we are also inside previous Friday midnight range. And this is really nice to see here. See the perfection. So it hits that. It didn't really give us an opportunity to enter here. Notice how the fair value gap stays open, and here stays open as well. We could say maybe, I could say this was an opportunity to enter. Like here, if we take this BC, and here the market structure shift with this candle being lower than this one. And this is the fair value gap, and it comes here, and it goes all the way up into the fair value gap of the midnight range from last Friday. But not a very clean entry though. And see how it comes lower. This is a Tuesday high. And here we also have like a bullish breaker. So low, high, lower, low. We'll annotate that in green. Take a darker green. And see here, it comes into the bullish breaker, and it also hits today's first fair value gap. This is the first fair value gap after 130. So this is the 130 opening price, no fair value gap until 1332. I see the perfection here, hitting it at 1415 today. And the rest of the session was not very clean. I didn't really like it. I think it's not really worth it to trade in this session. But see the respect here, and it goes high, takes this liquidity. It fails to take the liquidity over here. Here's a turtle soup, goes short in this fair value gap. We take the volume imbalance. And see how it comes here, and it's just consolidating. Yeah, not so clean. And then it comes down. It takes this liquidity, so here we have relative equal lows, and it hits the range low. So this is between 1330 to 14. We have the quadrants. This was the high. This was the highest candle, and then 75, 50%, 25, and low. And see how it takes this liquidity here. See how it taps here. So that's really nice. And see how this is confluenced with the TLCA. If I open here, notice just like a tick or two above this one, showing it's bullish. And at what time this is happening? This is happening at 1544. So we have the market on close macro at 1550. And notice how exactly at 1550 till 16 we have the market on close for 10 minutes. It's coming here into this wick. So this is like the midpoint of this. And this is also the Thursday 1:30 p.m. open. So this is the opening price on Thursday 1:30. So look over here. 18,282. This is this price level, comes here, and then boom, it goes up from here. Here it makes like this big busy. And then as we want to see whenever we are bullish, we have to take this into account as well. We want to see price staying in the upper quadrant, so above 50%. And here is like perfectly touching the Tuesday 1 p.m. open, and it's in the upper quadrant. So this is a great confluence. 1555, price dips into that, like a very big dip of around 70 to 80 handles. And then it goes up and takes this liquidity over here. Doesn't manage to take this liquidity, but it was like a very short little scalp here. So this was today's session. Not very clean, but still there was some good setups like this one, optimal trade entry, and maybe a short scalp over here as well. But yeah, that's the review. I will not be interested in trading tomorrow. I'm happy to close the week on Wednesday, close it early, and just practice patience and abstaining from the market. So I'll probably make a review of what happened tomorrow as well, and then hopefully I'll do trade analysis of next week, inshallah, over weekend. So hope you enjoyed this one and you find it useful. And I'll touch base with you again tomorrow, inshallah.